Hey everybody, good morning and welcome to the Daily Read with Jeff Kikel here on Exit Rich, Retire Free, and it's Monday, August 17th. It's another Monday, another day of craziness in the Middle East, and just a few things that are starting to somewhat crack what we've seen going on. For the last 2 weeks, I've told you that the market has been riding one big idea that cooling data means that the Federal Reserve is going to cut interest rates and everybody wins. Today, that story got its first real crack, and it's coming from an unexpected place, the Fed itself. Let me tell you what has just showed up. Now, our regime lab today shows a market pulling in two directions at once. On one side, a genuine party in chip stocks. Memory chip names like Micron and SanDisk are ripping higher. The whole semiconductor group is on fire. But on the other side, a distinct chill. Oil spiked on a fresh geopolitical threat, bond yields ticked up, and the one that matters most, we learned that at the Fed's last meeting, three officials wanted to raise rates, not cut them. Three. That's an unusually loud disagreement inside the Fed, and on Wednesday, we'll get the full minutes. So under the hood, here's why that dissent matters so much. For weeks, the market has priced in exactly one thing, that the Fed's next move is down. Weak jobs, cooling inflation, cut, cut, cut. But three voting members of the Fed just said the opposite. They wanted to hike. Now, I think that's insane, but that's their prerogative because they don't think inflation is beaten yet. Now, add today's ingredients oil spiking, which feeds straight into inflation, and yields climbing. Suddenly, there's a real counter argument forming against the entire easy Fed trade that the market's been leaning on. Doesn't mean that rate cuts are off the table. It means the debate is very much alive, and the market had quietly stopped treating it as a debate at all. So, what does this mean to you? The lesson is not to go flip bearish, it's subtler. Notice when a consensus has gotten lopsided. For 2 solid weeks, everyone has been learning or leaning the same way. Cuts are coming, buy. And when everybody leans in one direction, the danger isn't the direction they're leaning, it's the surprise from the other side. Today, the other side finally spoke up, and you don't have to bet on it. You just have to stop assuming the story you've heard all month is the only story. So here's what I'm watching Wednesday, 2 p.m., the Fed minutes. If they read hawkish, lots of worries about inflation, real appetite for a hike, the real the rate cut trade gets a cold shower, and keep one eye on oil. If it jumped today on a Middle East threat. Rising energy prices are the fastest way for inflation to come back and hand those hawks their argument. Both point at one question. Is the Fed ready or is really about to ease, or has the market got ahead of itself once again? So, summary for today, the story just flipped the other way starting off this week. Confidence is medium and risk levels are elevated again. So we're at a medium risk level last Friday or last Thursday, and they're elevated again. We need to watch what the Fed's minutes say this week. Are there cuts in there? Is there a hawkish surprise that we don't know about? When a consensus gets this lopsided, watch the quiet dissent. Today it spoke up. So that's your daily read for the day. I'm Jeff Kikel with Exit Rich, Retire Free. This is for education, not investment advice, but if you'd like to talk about your own plan, you know where to find me. So thanks a lot, and we'll see you guys back here tomorrow.